Can the S&P 500 keep going up in a straight line? Many experts are saying that it 100% can't. Let's have a look at the facts. We're seeing the S&P at 6,450 points. That's a fantastic 15% up on 12 months ago. And yet tariffs are looming. The effects are starting to come through. Unemployment is increasing. Are we going to see the consumer suddenly not be able to afford to buy the things that they've been buying and driving the economy forward as they have been in the past? That's what many people are expecting. When we look at profits, we realize that 83% of the companies that beat their estimated profit figures, 83% were driven by AI. Top 10% of companies are bigger than the rest of the 90%. Tech companies in America worth more than Japan, Germany, and the UK added together. Crazy stats. If you had a property and you want to buy a property, it's 25% lower than it was in 1950 compared to the gold price. Gold has gone up much faster than property, and as property starts to reduce and starts to go down in value in America, expect the same, and some trend of that already in the UK. Other markets potentially will hit the same situation. So when we look at the future, we have to balance it out. Can AI continue to grow? Are we got an AI boom? Yes, we have. But don't forget, there's going to be more competition. Can companies continue to ease out and gain more profits as the market demand falls? Market demand is going to fall. Why? Consumer doesn't have as much money in the pocket. So when you're investing right now, realize that China is in a situation whereby its tariffs are unknown. We've got a situation with Russia and Ukraine where potentially we could get peace, and of course that would be absolutely fantastic, but we don't know the final details. Right now, when you look at the market, you see the AI boom and you go, wow, this is incredible, and AI is going to continue. Don't forget, that depends on consumer demand. If you look at America, just as an example, 2/3 of the economy is driven by the consumer spending. If there's less people consuming, consumer spends less, then all of a sudden you're in a situation whereby companies are going to be limited to the amount of growth they can get. There's absolutely a reason for diversification right now. Expect some summer volatility over the next few months. It isn't going to go up in a straight line. I'll keep you up to date. Subscribe to the YouTube channel. I talk about the best investments and the best places to put your money. Right now, it's diversification. Yes, there's potential for AI. Yes, there's potential, particularly if we get good peace between Russia and Ukraine. That's complicated. It depends what that peace is. Is it temporary? Is it permanent? What does it really have an effect on? There's potential, no question about it, but tariffs and their effects are looming. Volatility for sure. Diversify. Diversify means some in money market accounts, some in quality stock, particularly stock that Warren Buffett would buy, that are paying good dividends. In Germany, you'll see companies like Mercedes paying 8% dividend. Okay, those types of investments are going to be steady and going to be in a good position. Gold as a percentage, or Bitcoin, whichever you prefer, as an alternative, just to make sure you've got that extra security. Make sure you subscribe. I'll talk about particular stock, particular opportunities, but right now I'm saying make sure you're diversified in your portfolio.